morning. Welcome to IG's early morning call. It's Thursday, the 2nd of November. Let's take a look at the headlines as we wait the start of today's European session. It's really all about central banks. We saw the Federal Reserve out with an interest rate announcement yesterday, and the general swing of things is that rates are unchanged, but Jerome Powell keeps the hiking bias in place. Bank of England to decide on rates at midday. UK earnings, meanwhile, coming up today. We've seen numbers out just a short while ago from Sainsbury, seeing full year profit in the upper half of guidance. We've also got news headlines coming through from Shell, which has been trumped by the news that there's another £3.5 billion share buyback. A whole long list of other companies reporting earnings in the States. It's pretty much about tech. Last night we saw PayPal up on the market in excess of 2%. It's raised its full year profit forecast. Also, we saw Airbnb last night. That was on the way down by 2%. Apple due to report later on today after the market closes. That's for its fiscal fourth quarter numbers. Let's take a look at volatility. Down for a fourth day in a row, actually. These three candles we got here on the way down represent the worst 3 days for volatility since March 2022. And this indicates that people going back into risk assets. And the message is, I think, that people are looking now that the central banks possibly might have done all they need to do in terms of uplifting interest rates to tame core inflation. Of course, headline inflation includes oil, which many are suggesting could well see some further gains. Momentum on the way down for the VIX, an interesting sort of tailwind, I suppose, for the markets. But this is giving us the upside on equities. This is the FTSE 100 opening stronger today at 73.90 on from yesterday's cash market close. You can see the 24-hour markets clearing the way now to giving us a high not seen in more than a week. And it's the same sort of thing across the European markets as well. Much of the 24-hour market impetus yesterday was driven by the Fed, which I'll cover in some more detail in just a few moments' time. But you can see here as well that we've got a little doji star candle, but we do have another push higher. Intraday, we've been the highest we've been there since the 19th of October on the German DAX. And the French CAC 40, same sort of price action we got with the markets up 69.89, pushing higher as well, like the rest of the European markets. Let's take a look at what's been happening overnight in the Asia-Pacific markets, where we've seen gains pretty much across the board. And you can see there that in amongst the gains that we've seen, we've been looking at a rise this week pretty much all the way for the Japanese markets. And Japan has been one of the outliers. But we've seen gains across other markets, but Japan has been a particularly good performer. I want to show you what's happening on the 24-hour markets, bearing in mind that we've got this green candle that we saw yesterday. In fact, some of the move up that we've seen in this session today, it is down on the 24-hour markets for the Nikkei 225, but it has been a pretty good week so far, and depending on what happens in the next full day tomorrow, the Nikkei looking as though it's going to have a pretty good week overall. Let's take a look at what happened yesterday on Wall Street with the close excuse me, across the markets as a result of the move up that we saw in the wake of the Federal Reserve interest rate decision to leave things on hold. Dow Industrials, S&P 500, NASDAQ all up. Tech stocks the better performer, up 1.6%. Let's take a quick swing past the IG 24-hour markets to give us an idea on what's been happening late in yesterday's 24-hour markets, a continuation of that push higher for the NASDAQ, looking as though we're going to open higher in today's session. You can see today's 24-hour markets just opening with a very small holding of yesterday's gain. Same sort of thing for the S&P 500 and the Dow Industrials. So things looking good as we see things move overall in the markets. So the Federal Reserve held interest rates at steady at 22-year highs for a second straight meeting late yesterday during the Wall Street trading day. This means that the federal funds rate remains at a range of between 5.25% and 5.5% as the central bank waits to see how its aggressive credit tightening campaign filters through the US economy. However, it left the door open to a further increase in borrowing costs. The policy statement acknowledged the US economy's surprising strength, but also took the tighter financial conditions faced by businesses and households because of rates at 22-year highs. Powell told reporters inflation has been coming down, but it's still running well above our 2% target. A few months of good data are only the beginning of what it'll take to build confidence. Let's take a look at what happened late in the session yesterday for the dollar. Excuse me. And the dollar pulling back from this channel that we've been monitoring on this Andrews pitchfork. I was talking about this yesterday, about the upper band providing us with some sort of resistance, and that's exactly what happened. The fundamentals anticipating all this, and we're seeing a drop down today. We're currently trading at 105.97. We've got support just below where we are at 105.69. So the dollar down for a second day in a row in the wake of the Fed interest rate decision. Now it's all about what's happening here in the UK today, and the pound very much in focus. Traders are waiting the Bank of England to deliver its interest rates at midday today. The Bank of England board members are widely expected to keep policy rates unchanged at 5.25%. The market will, however, be attentive to Monetary Policy Committee comments that will accompany the decision. It's also expected today we'll see the release of the Bank of England quarterly monetary policy report with forecasts for inflation and economic growth. I want to show you what's happening with sterling against the US dollar. We've seen this creep higher recently, in part because of the pullback in the US dollar. Inflation here in the UK is holding firm at 6.7% for the latest reading, roughly, excuse me, double that of the US 3.7% and the Eurozone 3.1%. As for growth, UK economy has remained virtually flat for the past 5 quarters. Sterling has been under pressure, excuse me, against the US dollar because of the expectations that the Fed will keep interest rates higher for longer. And that's given the dollar a bit of a boost, which has seen sterling down. So sterling now trading in a band between 120.38 and 123.08, waiting that interest rate decision at midday today. Meanwhile, other economic data out this morning. Trying to quickly swing by what's been happening with the Australian economy. Trade surplus down to a 30-month low of 6.8 billion Aussie dollars in September. The shipments dropped by 1.4% from the previous month to 45.6 billion Aussies. Excuse me. Meanwhile, imports jumped by 7.5% to a record high of 38.8 billion. Not much move in the Australian dollar today, so I won't show you that. But I want to go on to what we got later on this morning, because we've got some German economic data out at 8:55 a.m. UK time today. German unemployment is expected to see a rate rise to 5.8% in October from 5.7% in the previous month. Excuse me, it's one of those days. Let me just quickly run through some of the other statistics we're expecting later on today. In the US, of course, the US is just 4 hours, or the Eastern Seaboard is just 4 hours adrift from us at the moment. So 12:30 p.m. we get the weekly jobless claims. Expectations are there for 210,000. Later on in the afternoon, 2 o'clock in the afternoon, factory orders. Expectations are there for a rise of 2.5% for the month of September. Now, let's shift things away from where we are on the numbers in terms of the economy to some of the corporate news headlines. I want to begin, first of all, with the big one. Shell out this morning with its third quarter figures. The company earning $6.2 billion in the quarter, in line with expectations on higher refining margins and strong liquefied natural gas trading, LNG. The company announced a share buyback as well of $3.5 billion over the next 3 months, up from $2.7 billion in the previous 3 months. Now, we've seen some interesting numbers coming through from these big oil majors recently, and Shell benefiting from some of the big numbers coming through. We saw some positive reaction recently to Total Energy's numbers. We've seen some positive reactions recently to numbers coming through in the States as well. But we've seen a little bit of a pullback in recent days on the back of a drop in the price of oil. The stock will open this morning at 26.58. These look like good numbers this morning. If you're long on this, your stock goes down here at around about the 26, just below the 26 level for Shell. BT Group is another one. My apologies, I'm coughing so much this morning. BT Group is another one where we've seen earnings out today. It's first half numbers. It's maintained its annual outlook. This is the biggest broadband provider in the UK, and also it provides a large coverage on mobile across Britain, posting a 3% rise in adjusted core profit to just over £2 billion. But if you look at the share price, you can see it's been bumping along the bottom recently. Now, I had this line here on from the low point we had back on the 12th of December 2022, and BT has been finding the going tough. Expenses are high. It's rolling out high fast broadband across the country, and so costs are up, but it's desperate to drop through this 102 level, I suspect. Yesterday we tried to get down there. We closed at 111. 110.02 is where we're looking for support. Interesting to see where BT opens up a little bit later on. Another one is Sainsbury's out with numbers this morning, forecasting full year profit at the upper half of the previous guidance, reporting that flat profit for the first half this year with strong grocery sales offset by a weaker performance in general merchandise. People obviously buying food and not necessarily buying what some may perceive as being those discretionary items. In yesterday's session, Sainsbury's closed up above what had previously been resistance at 260, closing at 261.6. And broadly speaking, again, Sainsbury's, interesting to see where this stock opens at the beginning of the session in today's trade. I want to stay on the charts. Just want to bring up the stock trading chart of Haleon. This is the company spun out from GlaxoSmithKline last summer of last year, and it's been producing some good numbers recently. And the third quarter trading statement this morning looks pretty good. 5% organic revenue growth, 9-month revenue up 8.5%. Most of this is coming through from the European and Middle Eastern markets, up 10.8%. APAC increased 5.9%. North America down 1.5%. But Haleon not too far away from recent highs. Will open this morning at 330.5. The company saying full year fiscal 2023 guidance is reiterated after the completion of the Lamasil sale on the 31st of October. Another one worth watching, if I stay on the charts here, I just want to bring up a chart here for Deutsche Lufthansa and the Lufthansa results this morning, coming in the context of a recent drop in the price of shares. Quarterly profits slightly above analyst consensus on the back of robust travel demand this summer. Next year, Lufthansa expects capacity to increase further to around 95% of pre-pandemic levels, which should help it post an adjusted EBIT margin of at least 8%. Now, this direction of travel is not boding well. This is a very strong trend, and we're going to have to see something really big to change this around. We're opening at levels of 659, and indeed in yesterday's session, we touched the lowest point intraday, not seen since the 25th of October 2022. Now, a couple of stocks worth watching on today's session as a result of earnings out late last night on the US markets. Airbnb, it traded lower after the release of its third quarter earnings last night, excluding one-time items on income tax benefit. Airbnb posted adjusted earnings per share of $2.43. Now, that was up on the comparisons of $2.10. Airbnb's third quarter revenue up 18% to $3.4 billion, broadly in line with analysts' expectations. But investors reacted to the group's forecast for the current quarter. It says it sees fourth quarter revenue slightly below Wall Street estimates of $2.13 billion and $2.17 billion. Analysts have been anticipating $2.18 billion. Well, we're cheese pairing here in terms of some of the numbers that we're getting. We're talking fractional differences on what's expected. But if you look at what happened, we saw the stock down 2% in extended trade late last night. But PayPal was quite the opposite story. It came through with some really good numbers, and the stock was up as a result of this. Full year profit forecast above Wall Street estimates, sending shares up. This announcement came with the publication of PayPal's third quarter earnings. EPS 130 per share, beating expectations of 123. PayPal's revenue jumping 9% to 7.4 billion. If you're an online user of payments, quite often you're steered to the PayPal business. But look at the direction of travel here. I want to show you this move up that we saw in this blue box here. If I can extend this just to show you what's been going on. This blue box represents the point at which was the COVID lows to the highs when people were using the internet a lot more during lockdown. 279% up in terms of share price. And then came reality, like a lot of these companies that were overextended, a pullback to more normal levels. But in fact, we dropped below that recently. And as of yesterday's close, we managed a 3.7% gain. But in the context of the losses we've seen, it really is not a massive move on the markets. Now, Apple is set to release earnings after the closing bell tonight for its fiscal fourth quarter numbers. Market expectations are for revenue to decline marginally by 1% year on year to 89.3 billion against 90.1 billion this time last year. On the other hand, earnings per share expected to be at $1.39, up 7.7% year on year and 10.3% up from the previous quarter. Now, investors will be looking closely at performance of products and services. Apple's hardware product sales is extended to see the recent downside, because of Apple's exposure to China, a market that accounts for 1/5 of the group's revenue. Excuse me. A report from Counterpoint Research suggested that iPhone sales for the first 17 days of the sale in China for iPhone 15 has underperformed last year's iPhone 14 by a large margin. The Street therefore expects Apple's services segment to offset a possible fall in product sales. Let's take a look at what's happening with Apple's share price. We've got this market. We're showing gains late in yesterday's session ahead of the numbers out later on today. We closed out yesterday's extended trade at 174.82. This isn't all session stocks. You can trade this when it produces earnings after the bell this evening. Also due to report tonight is Coinbase. Revenue expected to be 653.2 million, up 10% compared to last year. Last quarter, Coinbase surpassed analyst expectations of both top and bottom lines. Another stock to watch all sessions on the IG platform. Another all session stock is Moderna. Due to report today, the Street expects a loss per share of 1.9 earning 1.9 cents, $1.09 on revenues of 1.4 billion. Other earnings out today: Starbucks, ConocoPhillips, Eli Lilly, to name just a few. I want to end on the corporates with one news headline coming through late last night from Walt Disney. I'll show you the share price chart. It did respond with a small loss late last night. We are seeing Disney to buy Comcast 1/3 share in Hulu, a deal that would give Disney full ownership of the streaming service. It expects to pay Comcast about $8.6 billion by the 1st of December. Staying on the charts, just quickly update you on a couple of other areas. We've got small gains today after recent losses for the price of oil, and also gold holding the week's lows at the moment at 1984. Not much of a trade there. We will be back at 10:30 this morning with an update on charting the markets. I'll be back hopefully with a clearer throat at 12:30 today with the Beat the Street. But earlier than that, of course, we've got the Bank of England interest rate decision at high noon, and I'll be looking at that result there today and what the Bank of England has to produce in terms of its latest inflation report. Hope you can join us there.